So essentially, you're predicting negative organic growth this year, so a contraction for 2019, changing your guidance metrics. Is this about you managing investors' expectations?
Thank you very much for having me back on the program here. Starting out with the last question about changing our guidance metrics, that's been a decision that we've talked with our investors about for the last couple of quarters. And I think that the changes that we are announcing this morning is very much expected and appreciated by our investors and analysts across the world. And it's correct that we are guiding with negative organic growth in 2019 of between -3% and -7%. But a big part of that decline is actually a deliberate decision that we're making in 2019, doing what we call a commercial reset, reducing the promotional level that we've had during the last couple of years.
So it's hard to see how investors are going to see this as a positive thing, that you're going to have negative organic growth, even though I understand, Anders, you are trying to put a positive spin on it. Do you expect the buyback that you've announced to offset some of the negative reaction from investors?
We do actually think that what we're announcing this morning is very much what our investors are expecting us to do. The promotional level has been fairly high in 2017 and 2018, and there's a general understanding that in order to protect our brand and increase the full price sell-through in our company, it's the right thing to do to reduce the promotional level. And the good thing about it is it's a deliberate decision. It's a one-time thing that happened in 2019, where we reset our revenue to a slightly lower but much more sustainable level.
So will you be reducing those promotional levels globally, Anders, or just in certain markets?
It's a thing that we will do across markets in general. There will definitely still be promotions in Pandora, like in any other similar company. But what we are reducing is the promotions between the main gifting periods. But it is a phenomenon that you will see across markets, in some markets more than others, but it's not just in a few selected markets.
You're still without a CEO, Anders. It's been that way since August. Why is it taking so long to put in place a new CEO? Is it that nobody wants to catch a falling knife?
The search is still ongoing, and I think what is very clear from our announcement, both this morning and also back in November, is that we are executing forcefully and with full speed. Even though that we only have an interim joint leadership in place. But the search is still ongoing.
What skill sets are needed in leadership in terms of new people joining the board, Anders?
That is correct. Late December, it was announced that we are proposing, the board is proposing 2 new senior members of the board of directors to be elected at the annual general meeting in a month's time in mid-March. And meanwhile, the 2 new proposed board candidates are working as advisors and advising the board as of late 2018.
Anders, you know, some analysts have come out with comments. For example, RBC put out a note in the past couple of weeks saying that Pandora needs a revolution, not evolution. It pointed to the UK, saying the store network is overextended. Instead of just slowing expansion, making some of the changes to promotions that we've just talked about, will you start actually cutting back in terms of closing stores?
That's clearly part of the plan. We will still, on a net basis, be opening new stores in 2019. We expect to open a net 75 stores, but in that number is also a number of closing of stores across the world. And you should recall there that in 2018 we opened around 250 stores, so it is a 70% reduction of the net opening of new stores in 2019. But we do see still a lot of potential to open up new stores, but mainly in white space areas like in China and in Latin America.